Hi, welcome to this video day, which is on the 12th of October. It's Saturday. We're just going to be looking at the euro today, giving our updated outlook and forecast. Now, in terms of the euro, we're going to look at it against the USD, also the JPY, and finally the GBP. We'll go and look at the charts in a moment. Now, regular viewers will know, in terms of our longer term view of the euro, by looking at the big fundamentals, we see the euro as out and out bearish, a long way to go on the downside. Now, Euro GBP has fallen hard as expected. Still a lot more downside to come, though. The Euro, though, has mounted a rally on the USD and also the JPY. The rally is a selling opportunity in our view. Now, in terms of the Euro charts, we're going to go and take a look at them right now. But please do keep in mind, it is my view as of this present moment in time. It can, of course, change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including the three we're going to look at right now, and also our exact entry stops and targets, you can click on the link beneath this video and you'll be able to get live access to our member center. Now, in terms of trade setups, we're going to look at first, we're going to look at the euro against the USD. Right, just on Euro USD daily, and I'll just draw my technical levels in a moment. Now, in terms of not doing the longer term chart in this video, regular viewers will know we're pretty bearish. I think we're going to go down to 104.50 with a possible run on. This is longer term to the par level, okay? Do the technicals in a moment. Let's have a look at the big fundamentals behind the chart and the sentiment. For us, the big euro fundamentals are bearish. Yeah, they're really bearish. The economy is heading for a recession. Germany is already there. The zone will be in recession within a few months. The ECB, the central bank, are trying negative rates and stimulus. That's heavily bearish as well. So why the rally? Well, I just think, yeah, you can't have one-way traffic. Euro a little bit oversold. It's not that impressive a rally yet. I don't think it's going to become one. So correction of oversold for the euro. And if you look at the USD, the pullback in the greenback last week was pretty broad based on numerous currencies. It corrected. It was a little bit overbought. Quite a few speculators long. Weak specs get shaken out on stop. That's just what happens. I think now, though, a 25 basis point cut from the Fed is discounted. You can look at Fed Watch for that. I think there was a little bit of pullback in the dollar just due to the China-US trade deal truce. Okay, it's kind of a truce. If you look at the news, it's not a solution. Okay, that basically rallied risk assets, and yeah, the euro rallied a bit as well. Did Brexit optimism about a deal help the euro? A lot of people in the media said that it did. I don't personally think it had much impact. I think that news is just fitted after the price was moved, because the euro never went down when there wasn't much Brexit optimism about a deal. So I personally feel the rally will not run on much further, and we'll see the euro go down next week. I think something to look out for next week is watch the Turkish lira in relation to the euro. And I've done a video on the Turkish lira. We could well get a currency crisis there. The USD is pushed up on the lira. If it does what it did last year, like when we had the currency crisis, it'll be the same. EU banks will come heavily into focus because they're heavily exposed to Turkey in relation to loans and so forth. And the Eurozone banking sector is not very strong. It's very weak. And there is a crisis there. And I think that could pressure the euro. So keep your eye on the lira. The interest rate carry in favour of the USD. Obviously, interest rates so important in terms of Forex pairs. Obviously, you've got negative rates in Eurozone. Okay, the US are bringing rates down, but it's a decent carry. And I personally think institutions will hit the euro on the rally. Now, in terms of the chart, it's low volatility near historical lows, but the euro has basically come down. We've been bearish since 114, sold off the level, got stopped out here, profit, came back in, and we've held the trade for a while. It was 111.80 in, banked half out into 109, put it back in, below 110, got stopped at 110.60. So in terms of our profit, it's minor, 160 pips on both trades. It took a while. Okay, you do get the carry as well. This is a fast-moving pair, so a little bit of profit. And in terms of an entry into this pair, came above the 110 level, stopped out at 160. We finished back below it. I've just sold again at 110.40. I'm not being fussy with the entry. I thought, possibly the euro might run on a bit more on Friday, and it just didn't run on. It just kind of ran into resistance there, or it didn't even reach it. And I think, that level, you've got a round number behind. The round number is always very important. That level there should hold the rally on a close basis. And you can look as we come down. There's a correction of oversold, fails. Another one here, fails. This one should fail in our view. I've put the stop reasonable way back behind. Sorry, it's at 111.80. Just as we came down here, we tried to get up on that big blue, failed on the red, and then down. So in with the trade. If we leapt above 111, I would actually put another trade in back below 110.80. I'd add. I just don't see much upside in terms of if you wanted to come in short, where could you do it? I personally would just sell any red at the open, but you could wait for the 20-day moving average here. Held the rally, got through, you just sell back through it. I think if you're trading Euro USD, it does have limited upside, in our view, and it will at some point, I think, break into a really big downtrend. That has not happened. It's kind of been slow to the downside, but chart for us bearish, and I just personally think eventually the euro will crack on the USD in a big way. We've had two periods in the euro's history where the volatility has been this slow, and on both occasions the euro suddenly changed to high volatility and sold off to the downside. So I'm looking for that again. It's probably not the most exciting pair. Someone did say to me it is the safest short in the forex markets because the euro just has got such limited upside. We'll see if that view proves true. I personally think it does. See as the new week opens up. But if you look at that rally, 109 to 110.35, what is it? 135 pips. It's not a big rally, is it? So looking for the euro to sell off as we move into when we move into the new week. Now, what we will do is next pair we're looking at is euro JPY, and I'm going to look at the monthly chart first of all before I look at the daily chart. Euro USD monthly chart just very quickly. It's been one of our favourite trend following trades now for over a year, and it has moved down quite nicely, and now we've got a little bit of a rally to the upside, but we're now at this or coming up to the 120 level. That is a big monthly resistance level. You can see why in terms of we do reverse here, break up, okay, come down, test, reverse, one body holds, two bodies hold, three bodies holds, then you get the big red through, you get the blue up, back, blue pressing against level. So 120 is a massive level for euro JPY. So it's the nearly at the level. If it holds next week, then I think it's a great opportunity to go short of euro JPY. Where are we going to go to? Our view longer term is down to 100. There is a little bit of support in between, of course, at 110. Just to 110. Keying off that 120 level and having a stop behind it, it looks yeah, for us, a really good risk to reward trade. Now, what we will do is we'll go to the daily chart to draw some levels of entry, stop, and target. Right, Euro JPY daily chart, and obviously we see big downside potential, but the euro has rallied back towards the end of the week, and we think the rally is a sell. First of all, fundamentals and sentiment. As long as the global economy slows, and it's clearly slowing up, the yen will remain firm. It's the number one safe haven currency. Now, the risk on last week in relation to US-China trade truce does not change the big picture. Even if a deal was done between China and the US, global trade, global economy generally will still be slowing up. Central banks are powerless to stop it. We've made this point in quite a few videos. The big fundamentals favour the yen. Both central banks have negative rates. ECB, though, is likely to expand stimulus. Bank of Japan is kind of at its maximum in our view, so that will work in favour of the JPY. Also, the yen very oversold historically. It's been oversold or got to a level of really oversold since 2008. It's only recently been kind of rallying significantly, and it's got a lot further to run up on numerous other majors. Near enough every other major we think will weaken longer term on the yen. Now, in terms of our trading in this pair, I'm generally pleased with it, apart from the last trade I've done in this pair. Ran down quite nicely, had a nice trade there, got stopped out, sold off the 120 level, which is a key level. Okay, we've seen that on the monthly chart. We came down towards the 117 level, and ordinarily got 200 odd pips plus I'd bank half and look to come back in. On this occasion, I didn't. I made 10 pips, basically. I had my stop at 109.40, and we ran up again, or we've run up again to 120. But this is a key level, and this is a level that can really offer good risk to reward, and like really coming off those big levels that are significant on the longer term charts, obviously the daily chart as well. And also we've got a high volume institutional candle here, which I've noted before, where big institutions readjusted their positions in relation to what's going on in the global economy. I've explained it in a previous video. That candle that slices 120 makes the 120 level a really key level. So we've rallied back up. But when we rallied, we touched the 120 level, no more buyers, settled back a bit, and sat there for most of the day on Friday. My own view is, are there more buy orders behind here? I just don't think so. I think the euro's a sell on a negative open, so 119.60 would do it. If we do leap above 120, I think the top of that candle, the big one, is or the high volume one, we should fade to that. So we've got through 120, we come in through 119.80, a little bit tighter. Just don't see a big run up in the euro. Now, in terms of the stop, I'm viewing this as a long-term position. I'm going to put it behind that level there. Okay, so plenty of resistance there. It's 121.11, so just roughly in line with the round number. We know the round number is very significant because that's where the order flow is. Stop 121.30, and then a long way to go on the downside. I'm hoping this time we get a run down to new daily lows, then on to monthly support, and this time I get above 200 pips. I will probably bank half. You'll see what I do in the member centre. I was just really confident that we would break down. Okay, I didn't lose anything in terms of a loss on the trade, but lost back a lot of open profit, which is disappointing, as I think all traders know. But sometimes that just happens. But longer term, I really like the look of this trade. Now, one pair that has worked really nicely, got it right, unlike this one where I've made, in my view, an error. Euro GBP. It's got a long way to run on the downside, so let's go and take a look at it. Euro GBP daily chart, and in terms of this pair, it's worked out really nicely. I think there's far more downside to come. Monthly chart, I've got a target of 80 after chart lows down here at 85. Now, it's been a nice move to the downside so far. And when it came up here, you had that kind of real Brexit pessimism. And we did try and sell on that red there too early, got taken out in the blue. We waited for the 92 level to give way a round number. And basically through the 92 level, 91.80, we're looking for the 20-day moving average for rallies to really kind of fade back to it. Very often do that. Does. Comes down. And we come back to the 20-day moving average. And I elected to give my stop a little bit of room to there. So basically 91.80, where that blue went up and that big red rejected. This time we got through it. But this is where, yeah, playing the round number with the entry, we come out at 91.80. We just want to see if we break lower or if we go through the round number. She goes through the round number, and we'll just sell back through 91.80, and down she comes. So we're basically back in same level that we came out at. Now, in terms of playing this chart with fresh positions, I'm just going to draw a trajectory in there. That trajectory is almost in line with the top of that red and the 20-day moving average, which we now think will act as resistance. And you've got a bundle of bodies there that line up with that tail almost. Okay, so body, 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 tail, and the tail almost in line there. And obviously that's where this red candle came through. That should be good resistance. Stop back behind the trajectory. Okay, going down to here in our view. And then, yeah, if we take 80, that's going to be down here somewhere, isn't it? So even coming in now, you've got a good risk to reward. Okay, if she bounced back towards the 88 level, a sell. Going down, I wouldn't be surprised to see a little bit of a retracement, but yeah, I just don't see the euro getting back above the 20-day moving average. It's been a decent trade. Well, it's been a good trade so far for us, and I still think there's plenty more downside in the euro. So there's my review of the euro pairs. So I'm the only one a little bit disappointed in was obviously euro JPY giving back, you know, that open profit. But you know, she's at levels now. Yeah, the important level on the monthly chart, 120, which can be keyed off. Yeah, really good risk to reward in terms of shorting the JPY. Anyway, right, that is my view of the euro. We'll see how it goes. But thank you very much for watching me as usual. Take care and have a good day.